Three themes: housing strength, low oil, Fortress America. Let's talk housing strength first. I mean, there's obviously a correlation, I would think, with the drop in oil.
Absolutely. Home improvement is on a tear. It's up 42% for the year. We've had another year of good, strong housing growth. The remodeling index is at its highest point since the peak of the housing boom. And when the numbers come in, we're going to be looking at $145 billion spent on home improvement this year.
I wonder, though, something like this, you see Lowe's, Home Depot are at all-time highs, whether you miss it, whether you miss it at this point, right? The gains in the stock, some of the stocks that are in that particular basket have already jumped. Let me talk low oil. Talk to me. So what's the low oil trade?
So low oil, best way to play it right now is new cars. You're seeing it. You're seeing in the mix change of cars. New auto sales came in up 14% for January. That's the highest month in the last 7 years. And you're seeing it. GM, big is back. Trucks are up 40%. Chevy Volt down 40%. So the whole discussion on does oil affect cars, you're seeing it not only in the numbers, but in the mix and shift towards that.
Jim, you like that one?
I do. I like everything that we're talking about here, which is more consumption. First off, you know, what I think about your portfolio and to what you were saying about Home Depot and Lowe's, forget Home Depot and Lowe's. Look at what else is in the portfolio. There might be some other things that aren't hitting.
Well, I've got Whirlpool, I've got Masco, Mohawk.
That's exactly.
Bed Bath Beyond, Sherwin-Williams, Black & Decker. I mean, it is a lot of things carrying.
I hear you, but I'm suggesting it's up 40%. It's up 40%.
And your point is well made, and not to be facetious, but the stock market is 1% off its highs. So there's a lot of things that are, you know, at all-time highs. You know, I like autos, but I think that when you look into your portfolio, and I don't mean to cherry pick, but you can in your portfolios. Forget Home Depot and Lowe's. Look at Masco.
Yeah.
All right, Fortress America, Captain America trade. We've talked about a lot of
so you look at the S&P 500. 92 companies that are exposed only to the U.S. are expected to grow earnings 12%. Everyone else 6%. This is a motif cross industries that basically give you exposure to the U.S. and have grown consistently over the last 3 years. So you're looking at cross verticals. Boston Properties, Signature Banks in there, CVS Health in there. So this is a way to play the relative strength of the U.S. Whether the U.S. is going to be super strong or strong, on a relative basis, it's going to be strong. And these three this motif in particular allows you to play that.
Betting on the outperformance of the U.S., all right?
Which I like.
Winning trade.